Good morning, everyone. Last time I discussed with you about some basics of accounting, like the accounting definition, about the financial and the non financial transactions, accounting period. Now we have some other important accounting terms that are to be kept in mind. First, we have a business transaction. Now, one thing I have already told is that only the financial transactions are to be recorded. Similar concept, same thing is a business transaction. Now, what is a business transaction? The first and the foremost thing is concerned with the money or money's worth of goods and services. That means involvement of cash or the money's worth. Now, this only thing makes it a financial transaction. So we can say the very first basics of the business transaction is the financial nature of the transaction, that is concerned with the money or money's worth of goods and services. Now, second thing is transfer or exchange of goods and services. There must be a transfer of goods or the services. Only then we can say a business transaction is complete. There is a transfer or exchange of goods and services. Now, because it is a financial transaction, it will change the financial position of the business. Financial position involves assets and the liabilities. Now you will say, what is an asset, what is a liability? That we will discuss in detail. Next is effect on accounting equation. What is accounting equation? I'll tell you later on. Then we can say dual aspect. I've already told you accounting is based on a dual aspect. One is the debit aspect and the other is the credit aspect. Like we can say we can't clap with one hand. Same way accounting is incomplete without this dual aspect. That is, for every transaction there is a debit and there is a credit. Now that completes a business transaction. I'll repeat, it is concerned with the money or money's worth of goods and services. Now there should be a transfer or exchange of goods and services. Because it is a financial transaction, it will change the financial position of the business. It will affect the accounting equation. What is accounting equation? We will discuss in detail. And this transaction will have the dual aspect, that is one debit and one credit aspect. Now, second thing here is that a business transaction may be in cash or on credit. What do you mean by cash? That we pay immediately. We are buying the goods, we pay on the spot. Credit transaction, we are buying the goods, we are paying them later on, not on the spot. Okay, so the business transaction may be in cash or credit. Now, because a business transaction is a financial transaction, as we have discussed, it is a financial transaction. It is to be recorded whether it is on cash or on credit. We can't say that we haven't paid him the cash right now, then it is not to be recorded, because we will pay at some stage. So even a credit transaction is to be recorded. Next, we have account. What is an account? It is a summarized record of transactions relating to a particular head. Suppose I'll take one very simple example, that I am selling goods to a particular person on the regular basis. Now, today I am say it is 1/4/15. I sold the goods to a person X for rupees 100. Now, on 1/5/2015, I sold the goods to a person X for 500. On 1/10 again, I am selling the goods to X for 500. Now, what is an account? I will maintain an account of X where I will record all the transactions at one place. I will record 100, 500, 500. I will record all the transactions at one place in the account of X. Now, what is the head? Head is X. So it is a summarized record of transactions relating to a particular head at one place. This makes it very easy, to interpret the account, to to balance the account, to know the actual position of a particular account. So we make account. Now next we have capital. Now this is one very 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 important term in accounting. Capital. What is capital? Capital is the amount invested by a partner or the proprietor. Suppose today is 1/4/15, you are starting a new business. Now for starting any business, you will have some cash of yourself. You will start your business with that cash. Suppose you have 2 lakhs with you and you start a shop, a business. Now you will use this 2 lakh for the business, you will invest it in the business. Now this 2 lakh is capital. In the form of money or the assets having the monetary value. Either you will invest it as money, you will keep it as a money in your drawer, or you will buy the assets having the monetary value for the business. In any case, it is an investment for the business out of your own cash that you have kept for business. Now here one is very important concept of business entity concept. This is a very very important from the capital point of view. It says that a business is a separate entity in itself. That means business and the people who are running the business are two different people. One second, I will explain you in detail this. Now it says that business and you are the owner of the business, right? Here is business, your business, I will say XYZ firm. XYZ firm, it is the name of your business, and you are Mr. X, right? Now what the business entity concept says, it says that business is a separate person and owner is a separate person from the accounting point of view. Both are separate people. So accounting for business will be different and accounting for owner will be separate. So now when we are introducing the capital, what the owner is doing? Owner is introducing the capital into business, right? Suppose we are introducing 2 lakh. Now this is the money of owner and not the business. So for the business, it is like a loan. For business, it is like a loan of 2 lakhs from owner. That means business, it is a loan for the business from the owner. So this is a very important concept. Always keep in mind that business and its owner are two separate people. It is not one. Accounting for business is done separately, accounting for its owner is done separately. So what is introduced by the owner in his or her business is like a loan for the business, loan taken from the owner. So this is a very important concept. Let's go back to this business entity concept. Business and people who are running the business, that is the proprietor or the partner, are separate entities. According to the business entity concept, capital is the liability of the business toward its proprietor or partner. Liability is, like I told you, it is like a loan for the business in the layman's language, because right now you won't be able to understand what exactly liability is. So in the layman's language, I will say it is a loan for the business. Okay. So this is the concept of business entity. This is very very important. Understanding the capital is very important. It is the amount invested by the partner or proprietor in his or her business in the form of money or the assets having the monetary value. Business and people who are running the business are separate entities. So the amount that has been advanced by the partner or proprietor to the business is a loan for the business. It is a liability for the business. Okay.